Hello and welcome to this Thursday's morning markets briefing. We've got lots to talk about, but firstly, the SEC approves first spot Bitcoin ETF in boost to cryptocurrency advocates, as well as that, the Eurozone is now heading for an economic downturn, warns the ECB's vice president, as well as that Joe Biden to send a delegation to Taipei after Taiwan's election. Now, we've got lots to talk about in the charts, with lots to talk about in the economic calendar as well. We'll come to that near the end, so make sure you stay around so you can see that. But before we get straight into it, make sure you subscribe. But the first article to talk about, of course, is the SEC approving Bitcoin. Now, this is a breaking news kind of scenario here where it's just come through, so there's not as much to talk about on it, but it's so important to obviously highlight, as only yesterday we were talking about whether the Bitcoin ETF would be approved by the SEC, as we did know that a fake post on X, formerly known as Twitter, was put out by the SEC, which had been hacked by a person, which did then make a post saying that a Bitcoin ETF had been approved, and this did cause Bitcoin markets to rally for a second before, of course, the SEC chair did then put out his own post basically saying they hadn't approved it yet, and then we did see a sell-off as a result of that. And so we saw that volatility which we're now likely to see after the SEC obviously approving this Bitcoin ETF. Now, the US Securities and Exchange Commission has approved the first spot Bitcoin exchange traded fund. The top American securities regulators granted permission on Wednesday to sponsor of 10 ETFs, ranging from established players such as BlackRock, Invesco, and Fidelity. The decision also marks a U-turn by the SEC. The regulator resisted spot Bitcoin ETF for nearly a decade on the grounds that cryptocurrencies were susceptible to manipulation and fraud. And obviously this is what we've now kind of covered and kind of come back to for months now, is the fact that the SEC has been so hesitant of these cryptocurrencies such as Bitcoin, simply because of the volatility and the fraudulent claims which certain cryptocurrencies have had put against them. I mean, if we just think back to, I think it was Luna, the Luna crash that we did see. I'm not sure whether that was their cryptocurrency, but I know it was one of them. It was way up, but obviously as a result of issues with Tether and other issues relating to the cryptocurrency, a massive cryptocurrency like that was able to go to nearly no worth in very little time. And that's the true issue with cryptocurrencies, and that's why the SEC has been so hesitant to kind of make their stamp of approval known about their kind of understanding of crypto. And by approving this, the key thing for the crypto market is that this is a very positive sign for the future of crypto, and especially Bitcoin, as it does note now an official stamp put down by the SEC, the official regulator of US markets, being put down on cryptocurrencies, and is now enabling those key and large asset managers like BlackRock, like Invesco, and like Fidelity to start providing these sorts of services to do with cryptocurrencies to their clients. So this is so important to stay on top of. Of course, we're coming to it once again near the end on the chart, so make sure you stay around so you can see more in relation to that, where we'll be analysing the cryptocurrency charts. But that's all to talk about in this article. Next article to talk about, of course, is the Eurozone heading for an economic downturn, warns the ECB's vice president. Now, the vice president of the ECB warned the Eurozone economy is set for another downturn. This comes in expectations that a recent pickup in inflation is expected to persist. Now, obviously, we come back to the issues within the Eurozone economy, like other economies, including Britain's and the US's, so often because they do, house those key financial markets. But ultimately, what's been interesting with the Eurozone economy recently is that because, of course, the Eurozone economy includes so many different nations, we've seen very large disparities between the levels of inflation in one country, the level of economic growth in some countries, and the level of economic downturn or inflation in another country. And an interesting kind of nation within the Eurozone that has been to note is, of course, the German economy. Now, Germany, the largest economy of the Eurozone, is very, very important for that exact reason to the Eurozone. And ultimately, it's been struggling recently as a result of those high interest rates and high levels of inflation that we've been seeing. We understand that the key automobile manufacturing industry, which kind of Germany prides itself on, has been struggling greatly, seeing declines and contractions in the tens of percentages to the downside. And this obviously weighs on the German economy. It weighs on the population, and dramatically affects the future of the Eurozone as a whole, simply because Germany is such an important and integral part of that Eurozone economy. Ultimately, though, other nations have been doing better, but the way that Germany's been heading has been an interesting tale and an interesting kind of future kind of prediction for the rest of the Eurozone. And we've been looking at Germany's economy also on terms of inflation. So we've had lower inflation figures than usual in Germany, as then we've seen that kind of carried on with the rest of the Eurozone. But ultimately, the ECB is now warning of those economic downturns like we're already seeing in Germany across the entire Eurozone. And that's the important thing to keep note of here, is now we're likely to see that overall economic downturn, and we'll get into the reasons in just a second. But if we just think about the current issues facing all of these key Western nations at the moment for their economies, ultimately high levels of interest rates are massively weighing on business growth and expansion, which is obviously weighing on economic growth and that sort of thing, but also having those high levels of inflation that markets have been individuals have been dealing with, has ultimately been weighing on consumers' kind of purchasing power as well. So it's no surprise that we're now hearing about this economic downturn. Now, Eurozone inflation picked up from 2.4% in November to 2.9% in December. And this was unusual, obviously, because we had been seeing that long-term downtrend to quite low levels of that 2.4% figure for quite some time. But it does seem that, I believe it was removing certain subsidies in relation to energy did cause that tick up in inflation. Now, the comments were also aimed at calming expectations of a rate cut in March by the ECB, also adding that indicators pointed to an economic contraction in December. These comments highlighted the tough decision for the ECB on interest rates in January. The markets and ECB's own rhetoric has divulged with economists' expectation, with Eurozone inflation to hit 2%, the target this year, whilst the ECB expects that in Q3 of 2025. So economists are expecting inflation to be lower than what basically the ECB is expecting. That's what it does seem like. Now, the Eurozone economy has stagnated for much of the last year and shrank 0.1% in the last 3 months to in the 3 months to September from the previous quarter. Now, the economy is expected to recover this year thanks to lower inflation and higher wages. The ECB had forecast last month that Eurozone growth would accelerate from 0.1% in the fourth quarter of 2023 to 0.4% in the third quarter of this year. Unemployment in the bloc returned to a record low of 6.4% in November. So it's very important to keep your eyes on the Eurozone at the moment. Very interesting data on terms of unemployment, inflation, and now where growth may be within the economy. So definitely keep your eyes on that. Last article to talk about, though, is Joe Biden and his delegation to Taiwan. Now, Joe Biden's plans to send a delegation of top officials to Taiwan is coming into fruition following elections which are now coming up. This comes as a move which could further strain US and Chinese relations. Now, obviously, we've been talking about China a lot recently, less so about Taiwan, but obviously we have very, very heightened world tensions at the moment. We've obviously got Russia's invasion into Ukraine, which is, ever more gruesome, as well as, of course, the war in the Middle East with Israel and Hamas, which has the great possibility of obviously escalating into a more regional one. We have, US and British warships in the Red Sea, currently in action against Yemen Houthis attacking commercial vessels, and we do have those warnings by the British Ministry of Defence that they may, in fact, carry out strikes and direct military action on the Houthis if they do not hold off. So, adding into the mix China's possible invasion of Taiwan, if the Progressive Party does win this election on January the 13th, we do have a very serious world tension situation on our hands, and the potential for regional escalation into war is always there for all these kind of other wars that we're talking about. So this is why it's so important to stay on top of. The White House has formed a bipartisan delegation, including both Republicans and Democrats. Whilst Washington has sent delegations to Taiwan before, sending one instantly after an election will likely be seen as unusual by China and thus anger Beijing. The current Taiwanese election is between the Progressive Party, which is more aligned with Taiwanese independence and not too close with China, and the opposition party, which is the Nationalistic Party, which whilst is pro Taiwan, and pro kind of democracy and that sort of thing, is ultimately more inclined to have negotiations to do with China. Now, a Progressive Party led by Lei Ching-te advocates for formalizing Taiwan's independence. This all comes whilst the US and China try to stabilize relations, which are now at their all-time low. One former US official said sending the delegation so soon was a risky move, with another key official also noting how the timing could be used to further agendas, since China would be suspicious of any private assurances it got from the US about the mission, particularly if Lei, who Beijing already completely distrusts, does win. And that's the key worry for Beijing, because ultimately Lei is at the moment the favourite to win. The DPP is ultimately the favourites, and if they do get elected, this would be the third time in a row, and therefore provide an even greater threat to almost China's one China policy, which they're trying to obviously hold down on Hong Kong, Tibet, Xinjiang, and Taiwan. Washington has said, however, that the delegation is to reassure Taipei amid concerns of China's influence and pressure on the island. So this is so important to keep your eyes on. It'll be affecting world tensions and the dollar and other markets as well. Keep your eyes on it. That's all to talk about on the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening. Now, firstly, we do have the US 30, where we actually are seeing a greater deal of bullish momentum to the upside. Obviously, recently, we've been seeing this kind of consolidation, this slowdown as we've entered the new year, but ultimately, yesterday's price action has actually represented quite a bullish move, breaking above this week's highs so far, and now nearing the all-time highs, of course, of the US 30. So it'll be interesting to see how price does react to this kind of top level in the markets. If I can draw it out for some reason, yeah, there we are. It'll be interesting to see how markets do react to this kind of top level that's currently being formed. Ultimately, we are seeing that more bullish price action, though, so it'll be interesting to see how this works out. We should probably remove that, though, because we've now moved away from that kind of level. But ultimately, it does seem that price did react with that 78.60, and now we're on the upswing. So keep your eyes on the US 30. Next to talk about, though, is the dollar, where, to be honest, there's not too much to talk about. Of course, we are getting, the US inflation rate figure today, which is going to be so important to understanding how the Fed will now shape its monetary policy and therefore will greatly impact the dollar. But ultimately, recently we've been seeing a slowdown in the kind of momentum on the dollar. We saw volatility during NFP figures last Friday, but ultimately not much has happened since then. So keep your eyes on the dollar as we are getting that inflation figure today. We do have those clear levels of liquidity on the upside and downside. Next to talk about though is Euro USD, which obviously being paired with the dollar, we're seeing similar price action but mirrored, and ultimately we're seeing that level of consolidation. We are also getting an ECB economic bulletin, so listen out for that, along with, of course, that US inflation figure. So that should shape up to be a really interesting day for Euro USD. Next to talk about is pound yen, which now has finally broken above this triple top level that we were talking about for quite some time now, because ultimately since that great deal of bearish volatility that we did see from the Bank of Japan kind of warning increasing interest rates, which is quite unusual, we did see that kind of sell to the downside, and then we saw this kind of range form, and it now does seem that we've broken out of that range by breaking above that triple top that did form. So it'll be interesting to see now where pound can go. Will it return to these previous highs that we did make, or will we now return back down, retest before any moves higher? So keep your eyes on that. Next to talk about though is Bitcoin, which obviously is very important to keep your eyes on, simply because of that first article that we did talk about the SEC now finally approving the first Bitcoin ETF. This is very bullish news for the Bitcoin. So ultimately it'll be interesting to see how Bitcoin does react, how the markets do react to this information. We did have that bearish divergence on the RSI, but ultimately this news is going to hold precedent. So keep your eyes on Bitcoin. Bullish potential is for sure there. We have now bounced off that 50%, so maybe we are on the upswing. Keep your eyes on it. Next to talk about is gold, which not too much to say really. Gold's been quite boring. It'll be interesting to hear though from the US inflation figure today and see how that reacts, and see how gold reacts to that. Obviously, if we're getting a US inflation figure which hints to more hawkish policy from the Fed, we could see a move to the downside, but also global tensions are greatly playing into gold at the moment, so keep your eyes on that as well. Finally, to talk about the charts is of course oil, where price has now reacted to that 78.60. We have officially retested that 4 times top at that key liquidity zone, so maybe we do have that now sell side potential there to keep that move going to the downside, but keep your eyes on that. That's all to talk about in the chart. So finally to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. Now firstly, we will be getting Aussie balance of trade figure, as well as that we're getting the ECB economic bulletin, as well as that we're getting the Italian industrial production figure, and most importantly we're getting the US core inflation rate figure, and also the normal nominal inflation rate figure as well, where we are predicting an upswing in inflation in the nominal inflation figure, and a decline in the core inflation figure. So very important to keep your eyes on that. So as that, we'll be getting numerous Fed officials speaking today, along with the US monthly budget statement, and finally Japanese bank lending figure. So lots to talk about, and lots happening today, with lots on that economic calendar. But we've covered lots on the articles, lots on the charts, and lots on the economic calendar. That's all from us at Wildwood Capital. Hope you have a great trading day. Have a great one. See you later.